All right, we are continuing. Welcome back, first of all. We continue with our rolling coverage of the medium-term budget policy statement that was delivered in Parliament in Cape Town by the Finance Minister of South Africa, that is Tito Mboweni. And joining me to discuss the topic further is Bernard Mofokeng, who is the Director at CMSRM Partners, and also Dr. Sean Muller, a Research Associate within the Public and Environmental Economics Research Centres. Thank you, gentlemen, so much for your time. Bernard, to begin with you, what did you make of the midterm budget?
I think it was a tough budget for the minister, but I think he said the right things and also allocated the resources to the right areas. For example, the NPA and SARS.
All right. Tough budget, but some right things were said in that regard. Would you agree?
Well, I would agree that giving extra money to the NPA and SARS is a good idea, but that's it's really only 2 billion of the total amount. It was definitely a tough budget, and there's no way to really produce a budget that's going to make people happy in these circumstances. But it was a lot worse than I think a lot of economists expected. With debt forecast to go beyond 70% of GDP by 2022, that's quite a lot worse than was expected. The government's breached its expenditure ceiling, I think, for the second year running now, mostly because of Eskom. So expenditure's not being contained. There's a massive revenue shortfall. Growth is forecast to be 0.5% this year instead of 1.5%, which was the forecast in the budget. So overall, it's pretty bad.
And so, as an economist, what are your forecasts regarding what the ratings agencies are going to do? Because ultimately, this is what this budget is about, right? Whether we can save face or we're just completely junk.
Well, that's an interesting point. So, first of all, I don't do forecasts, and I should also say that most economic forecasts are quite unreliable. As shown by the fact that the Treasury, which actually has relatively good forecasts, forecast 1.5% growth, and it's turned out to be 0.5%, right? But I think the point you make is really important, namely that the budget is about crisis management, and in some sense at the center of that crisis management is trying to avoid a further downgrade by Moody's, which would then lead to local currency debt being fully junk, in effect, and possibly leading to an outflow of investment. An interesting thing about the budget, and this is speculation, is that there's this very negative forecast in terms of debt relative to GDP.
Yes.
But the Treasury say that they're aiming for a fiscal target where basically they get revenue to match expenditure by about 2022. And to achieve that, they want to find 150 billion rand, mostly in expenditure cuts. What's interesting in the budget is that there's no graph of that. There's no trajectory. So in other words, what they're planning to do in the budget is not even shown in their graphs. And as I said, it's speculative, but it could reflect the fact that actually in last-minute consultations with the ratings agencies, they realized that what they were proposing was actually not going to be enough.
Right.
And then that's indicative of the fact that, as you say, their main concern, their foremost concern is to avoid a further downgrade.
Right. Because ultimately, I mean, this budget is laying the framework for South Africa's economic turnaround for the next 5 years. And the minister did speak, or highlighted the previous decade that we are coming from. I mean, we can talk about it as the state capture project that really brought us, in terms of a South African economy, on its knees. But for you, Bernard, when you're looking at this budget and you're looking at where South Africa can go and whether we can reach any form of potential by way of improvement, you mentioned the NPA and the money that was allocated to SARS. I mean, is that enough? Is that enough to get us on the right path and to make us as resilient as that aloe plant that the minister brought to Parliament?
I don't think it's enough, but I think what we lack in South Africa is implementation. The minister can say whatever he wants to say, but if his colleagues in cabinet and government won't implement what he proposes, I think we're going to have a serious challenge continuing as well. Because in all these things, the proposals are good, what Eskom is supposed to do, what the NPA is supposed to do, what SARS is supposed to do. It all depends on implementation, and what the budget cuts are supposed to implement it. Also going to affect how and when we achieve the targets that he has set.
I mean, they say that a leopard never really changes its spots, right? So we haven't been great at implementation. What makes us think that we can do it this time around?
Yeah, I mean, that's a good question. I would agree with Bernard's point that implementation is going to be critical. I think also there's this strange tension, I think, with the Treasury, namely that the Treasury can't do most of this on its own. And yet at the same time, it still likes to hold on to the idea that it should be responsible for example, stimulating the economy or creating jobs. But I think actually what we need is a move away from the idea that National Treasury can do this, precisely because fiscal policy is clearly no longer really an option. We've run out of fiscal space.
So what are you saying? What are you saying? Monetary policy needs to come to the table?
No, I'm definitely not saying that. And I think people who've been promoting monetary policy in that way are largely misguided. They're using copy and paste rhetoric from heterodox economists in developed countries. And some of the things that those economists argue there are valid, but I'm not sure they're valid here. There is an argument to be made, and it's been there since we introduced inflation targeting, that the inflation target is perhaps too low. People like Nobel Prize winning economist Joseph Stiglitz was in South Africa in the early 2000s saying that the inflation target was too low. So that's something we could look at, but the thing is that's fiddling at the margins, and there's no real reason to believe it's actually monetary policy that's led us here.
Sure.
So in recent times, what's led us here is the global financial crisis, first of all, and Treasury pursued a counter-cyclical policy, which is why debt increased, and that was a good effort, but it didn't. The point of a counter-cyclical policy is at some point you need the economy to pick up, and it didn't. And one of the reasons was because of state capture and inaction in the Zuma era, right? But getting back to the question, implementation, yes, that is one of the major challenges, and it's not just implementation in some of the areas you might think about, but for example in education, right? Treasury doesn't actually have a lot to say about education, nor should it. It's not its mandate. But at the same time, it's kind of interesting that in the Treasury documents, they emphasize things like in the economic strategy document, they emphasize things like education. But there are no education specialists, for example, in the Presidential Economic Advisory Team, right? So either don't talk about education and have somebody else deal with it, or if you are, actually get some real education experts. Also, by which I mean not just economists who spend their time playing with education data, like people who actually understand the system. I
mean, just looking at this what we now know about the state of South Africa's pocket, if you allow me to call it that. I mean, what could he have done? You mentioned that it was a tough balancing act. It's been a tough balancing act for every finance minister that has been in National Treasury for the past, the better part of 10 years. But what could he have done here that he missed out on, in your view?
I think that it's not actually what he missed on. Is, for example, they must do things differently. Things have been easier in the past, but now they're getting tougher and tougher each year. For example, the NPA must do things differently to encourage people to rely on the South African government that it can deliver. This revenue office must also do things differently to collect more money, do things that they've never done before, become more efficient, use technology better. And I hope this money that they give to them will help them improve their technology in order to collect more money and also to enhance their investigation capability as well, because it will help them to collect more.
For sure. I mean, in terms of that collection, as the minister did say, is that we're collecting 1.3, did I hear correct, 1.3 trillion rand less this year? Can't be.
No,
can't
not
be.
1.3 trillion less. It's probably about, I think the total shortfall over the medium term is about 250 billion, I think, if I recall.
It's coming down from 1.5 billion to 1.3, I think, basically.
1.3, all right, so here it is. It's 53 billion rand less than what was expected in the February budget. So my question is, commendable, the fact that you've got very strong institutions and you have got law that is seen to be done, but there are countries, and even on the continent, whereby we don't have a strong NPA yet. Investments are flooding in. So my question to you is, how does that move the needle by way of attracting further investments into South Africa?
Yes, it would be nice if improving the quality of our institutions and eliminating corruption brought in investment. One of the sort of dirty secrets really of economics is that if we look at the history, one doesn't see a strong association, negative or positive, between corruption, investment and growth, right? So we've seen, if you look, for example, East Asian tigers, a number of them had certain kinds of cronyistic forms of corruption. We know that in China, for example, there are various forms of corruption involving state officials and so forth. So having clean government is not necessary for growth, neither is it sufficient. I think in the South African case, though, let's take an example like PRASA, right, where there hadn't been sufficient investment in rail rolling stock for such a long time. There was this massive investment program that was initiated, which was a great idea, and it was looted. And it was then delayed. And what that's meant is that those costs are being imposed on rail commuters, okay, so some of the poorest workers in this country, and that then has a knock-on effect on employers. They're late for work, it has implications for the salaries they expect and all that kind of stuff. So in South Africa, we have actually seen that corruption has had a material negative impact on investment in the economy. But it doesn't mean that when you tackle corruption, you're necessarily going to have a dramatic change in investment. I think what we were also hoping for was sort of an uptick in the sort of intangible thing in confidence. But in the context of sort of weakening global growth and various kinds of risks and so forth, the broader environment isn't entirely conducive. And I think there have been, progress has been slow in certain areas. I mean, a good example is ESCOM. So ESCOM is also an extremely difficult job. But it is one where one feels that the government under President Ramaphosa should have moved faster. So we've seen the ESCOM paper now. But was it really so difficult to maybe get it out by the end of last year? And ESCOM is really weighing down on the economy, both because it's weighing down on public funds, and so we need taxes to kind of cover that, or expenditure cuts elsewhere. Alternatively, load shedding and so forth is negatively impacting on the economy. Right? So that's maybe one area that they could have moved faster. But unfortunately, also, what we're seeing is that the negative effects of the Zuma era are still carrying over into the present.
But you know, Bernard, maybe let me ask you, given that it is your job as someone from the legal fraternity, you do interact with clients, I imagine some of them being corporate, and what do they have, you know, concerns around, you know, some of the legislation and the strength of our courts or laws right now? And do you think that this NPA investment will maybe get some of them to spend more?
I think the trick is to get some momentum in the legal fraternity. For example, NPA, doing a high-profile case that they can prosecute on and see that things are happening, that if you do something illegal, there are consequences for it. If you avoid tax, there are consequences for it. So if that starts happening, people won't take chances and try to avoid taxes or even do illegal stuff. Example, swindle companies like the VBS saga, you know, something like that.
I mean, but you gentlemen, just taking a look at the currency market, and if they say that, you know, what foreigners are saying or what investors are saying is as a function of what the currency market is doing, these guys are not happy. We're now 2.29% weaker against the dollar, and therefore the rand continuing just to go in one direction. I mean, we're just merely 4 cents away from hitting that 15 rand to the dollar mark, as you can see there up on your screen. What do you guys say about the moves that we are seeing in the currency?
So look, I have mixed feelings about using currency movements to determine whether sort of government policy and certain developments are good or not. I think one example where they were quite accurate was, for example, when Nhlanhla was removed and we had Des van Rooyen imposed on us for a brief period of time.
Right.
And I think that the crash in the currency reflected the institutional harm that was being done at the time. In this particular case, I think it's probably reflecting the fact that most economists and analysts expected a bad budget, a bad medium-term budget, but not something quite as bad as has been put on the table. But more than that, I'm not sure we can say anything else. It doesn't mean that the medium-term budget per se was a bad budget. It's reflecting the realities that we have. It might indicate, look, frankly, I'm quite surprised Moody's hasn't downgraded us already. I think they've been quite generous. And I think as South Africans, we should be relatively grateful for that. I don't know how much longer it can last. Clearly, it's not a decision based entirely on the facts before them. So yes, I think that's probably what the decline in the currency is indicating. And you know, is it a good or a bad thing? There are sectors that benefit from currency declines.
Sure.
And there are ones that are hurt. So the net effect is never entirely clear.
For sure. Of course, let's get more reaction from the budget. Joining us on the line right now is Treasury's Director General Dondo Mokgwajana to get a perspective about the medium-term budget policy statement. DG, I imagine that, you know, like us here, you have got your eyes on the money as always, and looking at what the money is doing in the currency market, it is not doing great things at all. Rand is significantly weaker, and some of the experts we have spoken to on CNBC Africa are saying that it's because this budget is a lot uglier than investors thought, and that an action from Moody's at this stage is inevitable. What is your response?
Look, I will firstly be speaking to Moody's in the next while, not long after you. But look, I think it's important that we have to believe and explain our own story. Firstly, what our view is that by what you presented today, we are making it difficult and tough for us to be able to choose what's right for us in stabilizing public finances. We may not have gone far enough in terms of what other people are saying. We're also saying that we are on the path to promote investment and economic growth through the interventions that we think are going to be critical to take us through to a different trajectory. And look, we acknowledge that state-owned companies are challenging and we have to do something about it. But key and what is important, we also think we have to improve spending efficiencies and reducing waste. So it is. We're going to be saying the same to Moody's in a way that. Can you hear me?
I can hear you, sir. I can hear you, sir, and you were talking about a lot of the things that we have to do, a lot of the things that we have to do to show that we are serious about a turnaround. So, but you can imagine, I mean, we as South Africans have been hearing this for a long time, that this is what we have to do, this is what we're planning to do, and then when it comes to days like this, when you get the numbers, you get even worse numbers than you expected. So what's your commitment to South Africans that this time we won't be having to do, but we'll actually be doing?
What is important is you have to characterize where the challenges are. Firstly, it's about growth. One, there's no growth, and we need jobs, we need growth. Secondly, if you look at the South African revenue services, and that's depicted in the numbers, 53 billion rand under collection in 1 year, increasing to about 100 plus in the third year. That dents heavily on the current numbers, and obviously your numbers will look bad. Secondly, and what is not coming out very clear in most of the people that we speak to, and it looks like it's under the radar. There was some kind of a revision of the GDP figures by State South Africa, reduction of 200 billion rand in terms of GDP numbers. Now, when you look at the broader, your debt to GDP will definitely rise. The economy is not doing well. So we have to put those things in perspective. But that's like crying over spilled milk. What is important is what is that we are doing or we are going to do to improve opportunities to promote investment and growth. And that's what we should be focusing on. And I think that's where we should rally around each other on those things. The final point, which unfortunately, as much as you would have loved to say, this budget, for instance, says we are short of 100 billion rand worth of reductions that will put these numbers to be proper numbers. It's around compensation budgets. We cannot unilaterally, without engaging with labor, reduce salaries of public employees. It will be irresponsible. But however, what we are saying in this budget that we are acknowledging that we say it's important that we have to engage labor, and labor must come to the party, including cutting expenditure that is inefficient. The minister did mention around cuts around benefits of ministers, benefits of parliamentarians. That
yes.
In a nutshell, we think should buy us room and space for people to realize that we are in a bad situation.
Yes, and DG, to your credit, that is a positive that some of the commentary that we have been receiving did highlight. But just a point of clarity regarding Eskom. In the statement, you do say that further delays in operational reforms could mean additional support is required for Eskom. Could you clarify what that means? Does it mean another bailout? And two, you do say in the statement, or the minister did say that if there is support, it will be in the form of a loan and not necessarily equity. What happens if Eskom can't pay back that loan or the interest? Then what?
That statement should be looked at not in isolation with what other broad issues we are seeing about Eskom. Firstly, the Eskom paper and the roadmap for Eskom's sustainability and future was unveiled by Minister President Gordon yesterday. Firstly, we are saying in the statement that for future, Eskom must fix itself operationally in order for its operational performance to improve, and over time, then clearly the finances will come right. If you fix the finances before the operations, it then means you keep on putting money like we've been doing in the last few years. In the last 10 years, we have given Eskom 83 billion in the form of injections, if you remember. Monthly change loaning into equity of 60 billion in 2009. A few years ago, we sold Vodacom shares to fund Eskom. Now, when you look at that, there's not much that you can see what Eskom did with the money. So we are saying, as we give you money, we'll have to separate a loan and also separate that completely from an equity. There will be instances where the equity will have to be given, an injection will be, where Eskom improves its business. But if it's for all, like it is now, it's for operational purposes, they are not able to go into the market and fund some of the operations, then immediately we say, we recognize that currently you cannot do well, we'll give you a loan. And that time, when you are doing well, you should repay back this loan. So we believe in our own story that Eskom is going to turn around, and that the paper that was released yesterday says exactly that. And that, but in the meantime, what you are saying to the current lenders and current Eskom bondholders is that we commit to ensuring that, firstly, some of the debt is guaranteed. So if it's guaranteed anyway, if Eskom fails to pay, government will have to step in. That's what we meant in the question that you're asking as to what do we mean by coming.
DG, thanks so much for your time. Of course, that was Treasury's Director General Dondo Mogajane on the line. They're talking to us about the budget. The DG saying that he will be speaking with ratings agency Moody's in a short while. We look forward to the outcome of those conversations. But of course, I am joined back again by Ebax's Rashad Tayob to discuss the plummeting rand and bonds. I mean, we had to bring you back because, I mean, things, we thought they couldn't get any worse. Yeah, no, they've gotten a little bit worse. In fact, a lot worse. And I'd just like to understand, for a point of clarity, there are numbers that have come out of the US. I believe the US GDP numbers have come out, and also an employment report, the ADP figures. To what degree has this impacted some of the moves that we are seeing in the rand this afternoon?
So the dollar has strengthened slightly, and I think that's aided the depreciation of the rand against the dollar, but that's only slightly. If you look at the ADP number, the last two job numbers that have come out of the US were a little bit weaker than expected, and now with this ADP number being a bit higher than expected, we're expecting the non-farm payrolls to be a bit better. So maybe this, and why that's important is that the Fed is meeting tonight, and we're expecting consensus is the Fed will cut another 25 basis points, and that'll be the third cut in the cycle. The question going forward for us as an emerging market is how much more does the Fed cut to support the US and the global economy? Because with the Fed having done quite a sharp U-turn this year, they've cut rates aggressively. That has caused a lot of money to flow into emerging markets, including South Africa.
Yes.
If they now pause, that level of support may diminish, and you may not get the inflow into the bonds that we've had over the course of the year. And if you look at the budget that was presented, we need all the help that we can get to finance these deficits.
But that is if they pause, because as I do understand, the market is pricing in around a 95% chance that we will get a rate cut this evening, and of course another one later on in the year. And then you've got the action that is happening in Europe with QE going on there as well. My question to you is, we are seeing the rand skirting at that 15 rand to the dollar mark. Should we go over? This or the tomorrow morning when we wake up, there you go. Well, we've just hit 15. I am told that those numbers will be updating in just a moment. Tomorrow morning when we wake up, and we wake up to news that the Fed in fact has cut interest rates, and we do have investors who are looking for higher yields in emerging market economies like our own, could the rand stand to benefit after this budget? And especially as the DG is saying that, you know, if some of our SOEs do need further support, like Eskom, government is always a guarantor, right? So we can just print more money.
Yeah, printing money is the definition of depreciating the rand. I think that's what happens. That's how depreciations happen. But the Fed tonight, it's priced in 90%, so everyone expects them to cut. That's pretty much in the pricing. The question is, if US data continues to be strong, the market expects another 2 to 3 cuts over the next 6 months. If the US economy continues to be strong, those cuts may not materialize, and therefore we won't necessarily get the support. Now, I think Dondo has an impossible task. If you said he's getting on the line with Moody's this afternoon, Moody's is very, very lean into South Africa. We've indicated that we are going to give bailouts to SOEs like Eskom, but they are going to be contingent on reforms and rebalancing that needs to happen. But to date, we've given massive bailouts, 23 increased to 53 billion a year. And actually the conditionality that's been put in place is almost nothing. So we're still waiting. We've been promising plans on Eskom. Treasury has been promising that to Moody's for the last 2 years. I think Friday is the time that the patience event does run out. And I think that's what the market's fearing in this depreciation of the rand, where if we get downgraded to negative outlook, the downgrade is inevitable within the next 3 to 6 months, and that's when you could see bond outflows of around 80 to 100 billion rands out of the market.
Ooh, too much of billions there for my liking. Rashad, thanks so much for your time. We will leave it there. Just bringing it back to the studio, gentlemen, just closing and final thoughts on this budget, and especially in light of what we did hear coming out of the DG of Treasury and his upcoming meeting with Moody's.
Yes, I would agree that I think Moody's has been very generous to us, and I think that's unlikely to last. It was a very difficult budget. It's a thankless task. But at the same time, I think we also need to keep our eye on how the Treasury is dealing with these pressures, and in particular, I think try to protect employment, try to protect service delivery, and pay a lot of attention to where the Treasury does actually cut in expenditure and the kinds of revenue raising instruments that it uses probably in next year's budget.
Bernard?
I tend to agree with Tondo that growth and investments are important, because with those two, we are going to get more revenue to support all the things that South Africa wants to do. And also from a legal side, not from an economic side like my panelist here,
Yes.
is that South Africa's got all the tools. The laws are already there. We just need to implement them.
Right. Right. Implementation. That's what it always boils down to. Of course, thanks once again to my panelists for joining me for the pre-medium term budget policy statement. I was in a conversation with a gentleman from the legal fraternity, and of course he joined me, or rather it's Bernard Mufokeng, Director at CMS RM Partners, and also Dr. Sean M. Muller, who is Research Associate within the Public and Environmental Economics Research Center. Woo! So much more still to unpack. Take a break after the short break.